Hey guys, it's Sasha. Over the last few months, we've seen an explosion in interest in cryptocurrencies. Bitcoin went from dipping below $4,000 in March 2020 to reaching over $63,000 in April 2021. As the price skyrocketed, the interest in Bitcoin re-emerged as well, as it did with other cryptocurrencies as well, which tend to take their lead from Bitcoin. Over the last few days, Bitcoin and other cryptocurrency prices have crashed, with Bitcoin trading at between $32,000 and $37,000 over the last 24 hours. A lot of people out there are actively encouraging people to buy the dip. The prices are so cheap that you can get double or triple or even more cryptocurrency for your money. But before you go splashing your lifetime savings, let me tell you why you should think carefully before you do so. Now, before I get into the detail, I am not here to spread FUD. I am not here to say that I hate crypto. In fact, it's the opposite. I am a mathematician and I absolutely love the concept and the theory behind it and the practical applications that I think it could have. In fact, over a decade ago, I set up mining rigs in my house mining Bitcoin, but that's a whole different story. There are some really important things that you need to be aware of, because aside from the naturally high volatility and the naturally high risk that cryptocurrency has, there are a lot of really big problems. First, let's talk about the outright scams. The decentralized nature of cryptocurrency and the relative simplicity of it mean that it is very easy, incredibly easy to go and set up or launch a new token or a new crypto. And so along with some really interesting new innovations, new types of chains, new chains that include smart contracts and other really good crypto stuff, the scammers have turned up as well, as they do everywhere where there is an opportunity to make money. The problem is that it can be incredibly difficult to tell the scammers from the rest until it's too late. There are three most common ways in which these scammers operate. The first is the traditional rug pull. This is a scenario where the person who creates the crypto collects a huge amount of that crypto early on before anyone else has it and before anyone has heard of it, either for free or by paying a nominal low amount to themselves in order to buy it through a fair distribution. Now, some of the newer cryptocurrency tokens also include liquidity pools, and these can suffer from the same issue in a slightly different way because the owners and the creators of the crypto will have access to those. So then after marketing the crypto and aggressively promoting it, the price of that crypto will rise. And when the moment is right, the person who owns that huge amount of it will go and sell it for a huge profit. This either results in the price collapsing to a point of no return, or the liquidity pool is used up, which prevents other holders from physically being able to actually sell. In some cases, both of those happen at the same time. These rug pulls happen almost daily. Just in the last week, we've had DeFi 100, Shiba, and even the famous Water and Rugs personality who actively on social media spoke out against rug pulls, doing a big rug pull on their own Fairmoon crypto. There is a slightly less obvious variant of this, which is called a soft rug pull. This is where the owner will slowly sell smaller amounts of their crypto over time so that nobody actually notices it happening. Usually in this case, the owner will spread their crypto ownership between a large number of different wallets, because then it's completely impossible to tell that they're actually doing it. Now, another scam method that is gaining momentum at the moment in the crypto sphere is traditional old school Ponzi schemes. This is a way of designing the actual crypto, designing the actual code that sits behind it, so that old holders are rewarded and profit directly from new holders who are buying in. Now, the longer you hold, the more your earnings will grow, except this scheme relies on a constant flow of new people, new investors to be coming in, because the moment that that flow slows below a critical level, the Ponzi scheme can unravel really quickly, because all the existing holders will stop growing their earnings at the fast rate that they're used to, and people will begin selling off, and that can create a really sharp drop all the way down to zero. Perhaps the most common way that crypto investors lose their money, though, is much simpler than both of those. Just a plain old pump and dump scheme. Now, in one of these, you will go and invest in something because you have heard it promoted, and you've heard lots of investors shout about how rich they've become, how much they've made so far, including possibly some people that you actually know. This is all part of the pump. The pump builds up a huge amount of hype in something to attract a lot of new investors, quickly drive the price upwards, and as the price reaches an all-time high, the owners of the bulk of it, the people who created it in the first place, will go and sell. And at that point, the price collapses and that's what you call the dump. And this is a traditional scenario which can happen alongside the others that I've mentioned, or instead, it doesn't really matter. Another huge issue with crypto is the fact that it's still in a relatively infantile state. Although crypto has been around for 12 years, which is a long time, its use cases have still not really fully developed. I mean, sure, I can go to some of those coffee shops in Shoreditch and go and buy my coffee using Bitcoin. But in terms of genuine real life problems and that need real life solutions that are specifically addressed by crypto that is fundamentally better than the other options that we have with using traditional financial services products, we're not really seeing those emerge just yet. Just as a reminder, the first iPhone came out just before Bitcoin did, and that changed our lives with an infinite number of solutions to an infinite number of problems that modern smartphones bring. So there's definitely a huge issue in my mind and in my personal opinion, in the fact that we're still sort of trying to figure out exactly what the actual problems that we're trying to solve using crypto are. We're trying to kind of tailor things to using crypto where perhaps there isn't necessarily a need to use crypto, and other traditional normal methods of exchanging value work perfectly fine. Because if the problems that we had were genuinely really big and really need extremely fast, urgent solutions because the existing set of solutions we had were just not good enough, crypto would probably have had enough time over those 12 years to adopt a very different kind of adoption curve. Anyway, that brings me to one really important aspect that needs to be addressed, and that is the emotional side of crypto investing, because crypto continues to be relatively unregulated, almost entirely in most countries. It has developed some quite unpleasant traits as a result. Aside from the outright scams I mentioned earlier, anyone can go and invest in crypto. You can be absolutely of any age, there is no minimum requirement, you can live anywhere, there are no protections, there is no monitoring, there is nobody providing any kind of oversight as to what's actually happening behind the doors. And this has done a few things. The first is we've seen a huge distortion in people's understanding of core financial principles and how money and investing actually works in real life. Making 10% returns per year is actually seen as incredibly bad by this whole new segment of potentially, in some cases, younger crypto investors. If you're not making thousands of percent in terms of gains per year or maybe even per month, then you're apparently losing out, according to this new mantra. And for those of us who have been around the block a bit and perhaps understand the world of investment and finance a little bit more, this rings huge alarm bells. It has also developed a tribe-like mentality. A lot of investors in the latest token or latest crypto will become very unhealthily obsessed with it. They will go and source out every single thing that talks about it. They'll be in communities on an almost 24-hour-a-day basis talking about it and sort of egging each other on and hyping each other up with rocket emojis and phrases that are surprisingly common, like "when a Lambo," which roughly translates to "when will my $50 investment become $300,000? And on the other side of the coin, excuse the unintended pun, anyone who dares to question or say anything negative about that particular investment will be branded as a hater who is spreading FUD. A large group of these investors will come at the person with varying levels of hate, but just because they are making commentary. There will be a lot of childish name calling, swearing, quite a lot of pretty bad obscenities thrown about, and this will range all the way through into concentrated efforts to literally destroy their career, to destroy their YouTube channel or whatever else medium that they're using to communicate. There'll be threats of violence, threats of death, and the rest of it. And I know because that's what I got for daring to raise my head above the parapet and literally just voice my views about some particular topics. That is the world in which we now live, in which this new form of investment operates. So the issue is that the vast majority of these crypto investments operate on you literally investing in hype. There is no problem that the coin or token actually solve. You're perpetually fed information which says that at some point in the future, there will be these groundbreaking developments that are going to completely revolutionize the world and revolutionize everything because they are coming, and you just need to hold your investment and tell more people to go and invest as well so that the price rises over time. In most cases, the thing that you're investing in is almost certainly not even in any way unique. The vast majority of these coins are just a copy of the code of another coin, with in some cases maybe just one or two variables changed very so slightly. Will there actually be use cases and good reasons to use them in the future? Maybe, but I can tell you for sure that 99.9% of these thousands upon thousands of new coins that are entering the market won't unfortunately make it to that future, because there simply isn't that much space for all of those to coexist and to be used for the same purpose. And so if you're deciding whether to buy the dip on your favorite crypto, just make sure you take some time to think through your decision before you go and make it.